Numbers, numbers, numbers. It's all about numbers. Any investment, real estate, crypto, commodities, gold, everything is got to do with numbers. The numbers, they guide us to where the potential lies in a particular investment. That's exactly what we are doing today. But we are not looking at the ticket prices, the price per square foot. What we're looking at is the supply of each product. Starting off 2025, what is expected to be handed over up until 2029, and then the conclusion to find the market gap. Before we get into this, it is important to note that not all data is always available. There may be scenarios where some projects are not yet registered in Dubai Land Department and therefore they don't show in our calculation, but we have tried to make this report to be as accurate as possible so that we can make the rightful decision. Now, this report is also available. If you want it, you can get in touch with us and I'll be more than happy to provide you the report and get your feedbacks on this particular report. We'll start with 2025 just to understand the kind of products that we have segregated, just to have the clear picture of their availability and expected inventory, and then we'll move on to the conclusion and see where the market gap lies. 2025, so what we have done is we have separated each of the products. In a sense, we have separated apartments to hotel apartments, service apartments and hotel rooms. Then we have townhouses and villas, and separate retail and offices, just to have the most accurate result as possible. So in 2025, we are looking at a total supply of 80,354 units, and out of which apartments take the lead with 72.7%, total 58,414 units. Now this is all of Dubai. It could be starting from Dubai South, going all the way to Dera, Mina Rashid, includes waterfront, luxury and affordable, right? Followed by, we have townhouses with 16.65%, and then villas at 5.05%, retail at 1.79%, hotel rooms at 1.69%, hotel apartments 0.97%, service apartments 0.56%, and lastly offices with 0.37%. Now this helps us to understand the kind of launches that we have seen over the past 4 years, right? Where do we see the gap? We can already see that there is a gap in commercial. We can already see that there is a gap in villas, right? But we'll discuss this when we get down to the conclusion. Now, 2025, over 80,000 units. 2029, we'll just have a look. We'll see that there's a drastic numbers change, right? Reason for that is we are still beginning 2025. As we progress 2025, we'll be looking at more launches, and therefore the numbers expected to be delivered, the number of units expected to be delivered in 2029 would increase and change the numbers in this particular presentation. Like I said, 2029 compared to 2025, we are only looking at 13,515 units as of early Feb. Out of which, again, apartments take the lead with 60.7%, followed by townhouses at 23.23%, and then villas at 13.5%, and retail at 0.42%. What's the conclusion? Till 2029, as of today, we are looking at over 315,000 units being delivered in the Dubai market, overall luxury, affordable, waterfront, etc., etc. Right? Out of those over 315,000 units, 244,196 are apartments, which represents 77.36% of the total market supply, which is massive. Followed by townhouses with 13.3% of supply, villas at 6.51%, representing 20,565 units in total. And then we have retails at 1.1%, hotel rooms 0.71%, offices 0.62%, hotel apartments 0.53%, service apartments at 0.14%. So what, as an investor, should you be looking at? What you should be looking at are the small independent villas. Reason for that is we are looking at over 20,000 units of independent villas being handed over until 2029. But what we have seen in the past 4 years is a lot of the developers have been focused on providing luxury villas, larger villas, we are talking starting point of 8, 9, 10 million and going up to 150, 200, 250 million. Doing products on water on lagoons such as District 1 West or Palm Jabal Ali, or you have some fronts still developing in Palm Jumeirah or Pearl Jumeirah, right? Tenal Al Ghaf. So these are the kind of products which have been the developers have paid more focused on. What they have not really done is providing the smaller villas, right? What do I mean by smaller villas? The ones that you have in Ranches 3 Kaya or Ranches 2, right? 3 bedrooms, about 3,300 square foot of built up areas, 4 bedroom, 3,500, 3,700 square foot of built up areas. This is the product which has not been launched by developers a lot. There's been 2 major launches in the past 2 years, which was Haven and Athlon by Aldar, where Aldar did these kind of products and they were massive success. And Aldar is now coming up with the 3rd community, the Wilds, also doing the same thing with a mixture of standard and premium villas. We are expecting MR to come up with a new launch of Grand Polo, also being focused on the standard villas. That's what the speculations are. But let's just look at the numbers. Now, approximate supply of villas in 4.5 to 5.5 million range is less than 3,500, which represents less than 1% of overall market share. Now, how did we come to 3,500? Now, if I go unit by unit, this is going to further reduce, right? We haven't really seen much of launches, but does that mean that you should be really focused on 4.5 to 5.5 million? Now, these are the villas, the communities which will launch at these prices, right? They did have premium villas going up to 10, 12 million for acres for that matter, right? We have 3 bedrooms starting 5.1. I think the last cluster was about 5.1, 5.2 million, right? But then they also have villas which go beyond 10 million, right? So these are the kind of products that we are looking at. Now, coming to the commercials, offices, we haven't seen any launches, barely any launches. What we have seen is developers such as Bengati, they have done residential plus commercial, so they have provided some offices on their podium levels. It has happened in quite a few buildings in JVC in recent times, but the overall supply of offices is just shy of 1950, which represents 0.6% of market share, which means that Dubai is growing, the companies are coming up, but we don't really have the offices, the nice offices. You understand? You know, the A, B plus, A grade offices, we really haven't, we don't have that. Even when we go to Business Bay, we don't have a lot of options. And surprisingly, we haven't seen a lot of launches. It's just in recent times we have seen 2 commercial towers come up in Motor City. Omnia did in Business Bay some time back, but that was a exclusive luxury product again with offices, and that's what Omnia does. And there's one more project going on in Business Bay at the moment. So there's really no supply for offices, and this is the market gap that the investors should be looking at. Now, as I said earlier, this particular report is available. You can connect with us and I'll be happy to provide you with the report. I'll be happy to take in your feedbacks, your suggestions, and thank you so much for watching. Thank you so much for your time. Have a good day.